Good morning, student. Today's topic is user of accounting, advantage of accounting, and limitations of accounting. This is for class 11th under CBSE board. Under this topic is under chapter number 1, Introduction to Accounting, and this is my lecture number 4A. Now I have to explain about users of accounting. Users of accounting. There are two users. First is internal users. And second is external users. Both the users have used accounting information. They use accounting information in order to satisfy some of their varied need for information. Internal users. Internal users are the persons who have a direct interest in the business enterprises, such as owner and management. Owner, owners, second management, are internal users of accounting. Owners contributed capital in the business and as such want to know about the profitability and financial soundness of the business. They also want to know whether the profit are increasing or decreasing. What are the reasons? Owners want to know what are the reasons for the increase or decrease in profit. What is the value of fixed assets and floating assets of the business? All such information is provided by accounting to owners. So owner is called internal user. Next, management. Management need accounting information for the efficient and smooth running of the business enterprises. Their needs are met by the accounting information provided by published reports of the business enterprises, such as profit and loss account, balance sheet, and cash flow statement. However, most of the needs of management are met by unpublished internal reports which are prepared most frequently to meet the specific requirement of management. Such unpublished or internal reports provide the information relating to the cost of product, speed of increase in the cost of production, profitability of each product, reason for increase or decrease in sale and profit, etc. So, management has direct access to these unpublished reports which contain valuable information not available to external users. Now, external users. Individual or organization who have present or future interest in the business enterprises but are not part of management are called external user of accounting information. They have no access of access to the internal or unpublished report of the enterprises, hence make use of external or published reports such as profit and loss account, balance sheet and cash flow statement. The external users are maybe investors, lenders, employee, government, etc. are external users of accounting. Now, advantage of accounting. First advantage is helpful in management of business. Helpful in management of business. Management need a lot of information for the efficient running of the business. All such information is provided by the accounting which help the management in the following way. We can say in the following way. First, in planning, decision making, controlling, etc. Second, maybe provides complete and systematic record. Business transactions have grown in size and complexity, and it is not possible to remember each and every transactions. Accounting keeps a prompt and systematic record of all the transactions and summarizes them in order to provide a true picture of the activities of the business entity. Third point, information regarding profit or loss. Accounting reports the net result of business activities of an accounting period. The profit and loss account prepared at the end of each accounting period discloses the net profit earned or loss suffered during the period. Next, fourth point may be information regarding financial position. Accounting report the financial position of business by preparing a balance sheet at the end of each accounting period. Balance sheet disclose the position of asset and their value on the one hand and liabilities and capital on the another hand. Fifth point is enables comparative study. Means by keeping a systematic record, accounting helps the owners to compare 1 year's cost, expenses, sales and profit etc. with those of other years. Such a comparisons provide the useful information on the basis of which important decisions can be taken more judicially. Next point is helpful in assessment of tax liabilities. Properly maintained records will be of great help when the firm is assessed to income tax and GST. Such records, when audited, are trusted by the taxation authorities. Next point is evidence in legal matters. Properly maintained account supported by authentication documents are accepted by the court as a firm evidence. Next point is helpful in raising loan. It help for taking loan from bank. On the basis of accounting information, bank sanction the loan to firm. Next point is helpful in prevention and detection of errors and fraud. So, student, these are the advantage of accounting. Now, next point is limitations of accounting. Yes, it have some limitations also with advantage. Any things have limitations and advantage more. First advantage limitations may be influenced by personal judgment. Influenced by personal judgment. Accounting is as at an exact science, and accountant has to exercise his personal judgment in respect of various items. For example, it is extremely difficult to predict with any degree of accuracy the actual useful life of an assets which is needed for calculating depreciation. The same is true about the method of valuation of stock and making provision for doubtful debt. Different persons are bounded to have different opinion in respect of such things, and hence it will result in ascertainment of different figure of profit and loss of a business by different person. Hence, the figure of profit and loss cannot be taken as an exact figure. Next point is based on accounting concept and conventions. This statement looks like advantage, but it is also limitation based on accounting concept and conventions. Accounts are prepared on the basis of a number of accounting concepts and conventions. Hence, the profitability and the financial position disclosed by it may not be realistic. For example, fixed assets are shown in the balance sheet according to going concern concept. I will explain later. Going concern concept. This means that the fixed assets are shown at their cost and not at their market value. So, these are the limitations. Third point is incomplete information. Incomplete information. Accounting statements provide only the incomplete information because the actual profit or loss of a business can be known only when the business is closed down. So, this provides incomplete information, hence it is limitation of accounting. Fourth point, omission of qualitative informations. Accounts contain only those informations which can be expressed in terms of money. Qualitative aspects of business unit are completely omitted from the books as these cannot be expressed in monetary terms. Thus, it means quality cannot be expressed in the term of money. Thus, changes in management, reputation of business, etc., efficiency of management, satisfaction of firm's customer, etc., which have a vital bearing on the profitability of the firm, are all ignored and omitted from being recorded because all of these are qualitative in nature. So these quality are not recorded. Fifth point is based on historical costs. Based on historical costs, accounts are prepared on the basis of historical cost, that is original cost, and as such a figure given in financial statement do not show the effect of change in price level because all the items have changes price day to day, but it record only historical cost. So this is also limitations. Sixth point is affected by window dressing. Window dressing refers to the practice of manipulating accounts so that the financial statement may be disclose a more favorable position than the actual position. For example, the purchases made at the end of the year may not be recorded or the closing stock may overvalued. Hence, correct decisions cannot be taken on the basis of such financial statement. So these are the limitations. Now I will meet with new topic. Today we have a study about users of accounting, advantage of accounting and limitations of accounting. Thank you very much.